Everyone, welcome to the last day of the month, April 30th, and this is Mish Schneider, Chief Strategist of marketgauge.com. And I'm sure by now you've noticed that it is extremely choppy out there and has been, and we're going to cover a couple of things to watch to see if the chop reconciles and which way it may go, and what, of course, would lead that up or lead that down. So let's start with the first chart I have here, and it's a weekly chart. It's also what I wrote my weekend daily about, which was how transportation, IYT, using that ETF, is actually sending a bit of a red flag. And if you look at it, you can see that light blue horizontal line. That was a weekly channel that it broke down from, as many of the other sectors did. However, while other sectors were rallying into the end of last week and even yesterday, Monday, IYT actually closed lower. So what does that mean? We're seeing it in some of the stress of like the employment costs that went up today and that consumer confidence has gone down a lot. We're starting to see signs of weakness in the economy. And this is where transportation as part of the economic modern family is so important as one of the key characters, the old Dow theory about transportation and how goods and services are delivered. So right now, if we just look at it, it could continue to chop between, say, 67 and 64. But if you look at it broadly, what you might see is the possibility of a head and shoulders top. Under 64, we would start to be a bit nervous about the overall market. But above 67, then it would sort of negate that pattern and we would go back to being more optimistic. Now, on the other side of the equation is the semiconductors chart, and that's also a weekly chart. That would be SMH. Now, SMH is also in a range, but it's back into that weekly channel that IYT broke down from. And so right now, that 220 to 200 seems to be the range that needs to reconcile. And if you actually looked at the daily chart, you would see right now it is under the 50-day moving average, where it's above the 50-week moving average. So the two time frames are important. But what it's saying is that if we cannot get through 220 or that 50-day moving average, also the resistance you see in that channel line, then that tells us that on the heels of some of the earnings we've seen, particularly Microsoft, which has sold off, and with NVIDIA, which would be the next chart I want to talk to you about. NVIDIA does not report until May 22nd, but that may be the pinnacle of the semiconductors and the chip. And if you take a look at that chart right now, it doesn't look too bad. There's good support at around 865, but it hasn't really been able to get to 300. The MOMO on this, and that was where you see my real motion indicator on the black chart now, by the way. The MOMO is showing that it's sitting on the 200-day moving average. The 200 in price is much further away. The price is above the 50-day moving average, but you'll notice that same blue line, actually momentum is under. So momentum is declining in a little bit of a bearish divergence. And volume is okay, but since the big down day, we've had basically average type of volume. So I think what might decide the fate of semiconductors, and it's not happening for another couple of weeks, would be NVIDIA. But nonetheless, keep your eyes on those two areas. Next, I want to talk to you about uranium because there was a story that came out yesterday, actually, that the U.S. was considering sanctions on Russian uranium, which provides 25% of the uranium, and the uranium market went up as a result. But as I'm talking to you today, it's come all the way back down into key support. So I think it's an interesting commodity to look at, number one. I mean, there's been stories obviously too about nuclear energy making a comeback, but the lead story really was whether or not U.S. was going to go forth with the sanctions. And I think it's important to note for two reasons. One, looking at uranium, and two, looking at the whole inflationary narrative, and then also looking at the geopolitical stress that the U.S. has been having sort of caught in the middle with Ukraine and Russia. And so right now, if it holds around this 28.80 level that it's trading at currently, starts to make its way back through 29 and 30, which is really where it got through yesterday, then it's possible that uranium could be telling its own story, not to mention an interesting thing to look at just from a price perspective. And last, I'm going to talk to you a little bit about biotech and one stock in particular in the biotech area, and that's Moderna. Now, if you look at that chart, it's actually looking pretty good. If you're looking at the weekly chart with me, what you can see is that if you go back a few weeks ago, the high was at 115 and it's currently trading at about 112. So what we really want to see now, looking at those moving averages, is it's over the blue line, that's the 50-week. It's over two of the dotted and solid gray lines. Those are our exponential moving averages. It's over all of that. So it's actually in a bit of a breakout. If it gets through 115, and this is interesting because biotech has been such an underperformer, then it is possible that we can see a move up. I would say my first target would be at about 137. So really, just to sum up here, the market is choppy. There's always a stock picker's world out there, and Moderna right now would maybe be one of the things to look at because of its interesting setup. And yet, we don't really know, with the Fed coming up and unemployment coming up, and of course the numbers that we've seen so far with a huge week of earnings, how this market wants to go. Do we want to correct more? Watch transportation. Can the semiconductors lead us higher? Watch SMH. And of course, keep your eye on NVIDIA as well, as that is really, I think, the best barometer for the semiconductor world. Okay, thanks so much for watching. Hope you have a great day, and bye for now.